All right, what's going on, everybody? Awesome new developments, cool things to talk about. The Fed is totally screwed. And I mean, their hands are completely tied, right? So let's jump into it. I think I'm going to do things a little bit differently now. I'll do a market analysis first and where, I think things are headed or any sort of themes. And then I'll get into positions later on because when I do my own research or watch people that I like, um, uh, it's interesting where their positions are at. However, I like to digest the information and make that decision for myself. So maybe we'll just start off moving forward here with market analysis first, and then get into positions in my positions, later on for anyone who cares. So essentially, the Fed, their hands are sort of tied, in that the bond market is pricing in inflation as sort of as the risk, as opposed to a recession. So how do we know that? We know that because a couple different things. Credit spreads are at extremely low conditions. High yield debt is performing well. I would suggest that high yield debt is probably in an uptrend. And also, this is the same view I've had on bonds for a while, that the bonds are not pricing in a recession, and they're pricing in inflation as what is the risk. Now, more confirmation as to that is as you see, Trump discussing whether he's going to fire Jerome Powell or not, and how he's constantly badgering, Jerome Powell or whoever, badgering, the airwaves, that Jerome Powell needs to be lowering interest rates and blah, blah, blah. And all while he's doing this, what's happening to real rates is they're going higher. And so that shows that when real rates are rising, as there's talks about cutting, or Donald Trump really pressuring the Fed to cut interest rates, if rates are actually rising as a result of that, that is showing that the bond market is concerned about inflation. It has nothing to do with credibility. You'll see, recently, credibility of the Federal Reserve. You'll see recently politicians are talking about how, firing Jerome Powell is gonna undermine credibility in the Fed, and that this rhetoric is coming from politicians who they themselves do not have any credibility. So if somebody with no credibility is saying that credibility is going to be undermined because of this, you can essentially discard that information. They're just being told what to say. They're just regurgitating what their handlers are telling them to say anyways. But now the Federal Reserve, it's important to note, the Federal Reserve does not set real rates. The bond market is what does. So, you'll see instances. So, for example, if the Fed was to cut interest rates now, I bet you real rates would rise. And, we see this all the time. People have probably forgotten recent memory. I don't know exactly when. I don't know. Did they start cutting rates here or here? Whatever it was, one of the last times that they cut interest rates, what actually happened to rates is they went higher. Now, why would they go higher? Because inflation, because first of all, the Federal Reserve does not set any sort of real rates. And second of all, because inflation is what the bond market is pricing in as risk. They're not pricing in a recession as risk. Now, given the fact that credit spreads are extremely low, high yield debt is sort of in an uptrend, and the bond market is selling off on fear that inflation is going to get out of control, and equities continue to climb higher. That is all financial markets saying to the Federal Reserve, you have much more room to be more restrictive if you need to be, and please be a little bit more restrictive. So the Fed is sort of, their hands are sort of tied, you know. So that's it for that. Now, let's go over some things here. Just a quick overview of, rates on the long end have been absolutely blowing out, and nice little recovery today. But the fact that equities remain very strong today, and same with Bitcoin, proves that there is so much demand for equities. And this is another indicator that you can put into the bullish camp, right? Some sort of informational edge that you may have that other people may not have. Not to say that that's anything that crazy of an insight. But it is certainly an edge that I have found, that I would consider an edge that I found useful. Okay, so let's just go over some market analysis here. Bitcoin. Now, Bitcoin continues to look fantastic. It's broken out to all-time highs. We're getting some sort of consolidation here. This looks great. Now let's go over this on a weekly chart. And yeah, one very strong week. Good volume. This is the second week. So I would expect this to continue higher over the intermediate term. Towards the end of this week, I don't know. It could completely consolidate here. That's totally fine. Intermediate term, definitely higher. Okay. So let's look at some Bitcoin miners. So you've got, Marathon is now in a new uptrend confirmed. Clean Spark uptrend. Riot. Sort of same thing. Let's see, Hut Mining, I believe, was always the strongest one, and it's sort of whatever. I saw something where Bitcoin miners are making a lot of money. I don't know if that's true. I didn't read that article or not, but if that is the case, that's very good. If you're bullish on Bitcoin, because miners help with the security of the network, so you want lots of miners, lots of companies doing this. You don't want to see that turn into something that is centralized. That would not be good. So let's keep this gravy train rolling for them. And okay, so Bitcoin, cool, looks good. Now let's go over NASDAQ. Looks great, like I said today. And this video might be a little bit shorter. But like I said today, or earlier in this video, that there's clearly still very strong demand for equities. Given what has been happening with yields, given the fact that equities opened at all-time highs yesterday, gave it all back, had a pretty weak day intraday. And, to sort of gain it all back, what happened at the very end of the day? Yeah, Very strong. Okay. So, tech stocks looks good. Let's go over, the NASDAQ 100 looks good. Clear uptrend. Let's go over how do some of these look. Microsoft. This has got to be one of the most insane runs I've seen in a long time. This is insane. I mean, there's not a single pullback after a massive gap up. What is that, 12% gap up? It never even retraced it, not even slightly, and has just continued to rocket higher. What the heck are you supposed to say? I mean, this is why you go after leaders. You don't mess around with anything else. I mean, this is the biggest, baddest company on earth. And okay, NVIDIA. Same thing yesterday. Massive gap up, I think 4% gap up, something like that. Doesn't even give any of it back, really. And what else is there to say? I mean, there's still demand for equities. Apple, see how Apple is doing. Yeah, see, super boring. That's because the market has deemed Apple as the laggard. So there, to expect Apple to all of a sudden outperform its peers now is just, the probability of that is a lot less. Not to say that it can't happen. It's just, it's weak. So you would expect that it continue to be the same until proven otherwise, right? I mean, it's still proven to be the laggard, so that's what you would expect as a result. Okay, Google. Same thing with Google, right? So you got Google, you got Microsoft. If Google performs well, Microsoft will perform well. Microsoft is right now, the market has chosen it as a leader. So therefore you can expect Google to underperform Microsoft, and that's exactly what you can see here. Not to say that this looks bad by any means. It doesn't look bad. There's a huge gap to fill, and it wouldn't surprise me that this will get filled. So at some point during this bull market that we're in. Okay, Google, NVIDIA, Amazon. Let's see, Amazon. Tomorrow, that reminds me, tomorrow the retail sales are coming in. That's pretty important. Amazon looks okay. Amazon's never really my thing. It's so jagged. It's so weird. It's never really met my eye, really, ever. It's in an uptrend, so what are you going to say about it? I just think there's plenty of things that are better. Let's look at Netflix. This looks fine. Completely fine. Netflix, totally fine. Alright, let's look at Meta. Still, totally fine. Nothing wrong with this. It might be a good entry for Meta here coming up pretty soon. And that would be really, really cool. Let's look at this on a weekly chart. For me right now, below these moving averages doesn't really meet my criteria, but it's not like there's nothing wrong with this. It's in an uptrend. It's consolidating, it's pulling back a little bit, who knows? Nothing wrong with it. All right, moving on. Okay, that's probably it for Mag 7. Oh, Tesla. Tesla's sort of just kind of chugging along here. Um, it looks good. Yeah, it's fine. It's fine. I don't expect any outperformance of Tesla right now. Right now, although this does look pretty good. If this week can close, have a strong close, I'll get definitely more bullish on Tesla. But yeah, this is fine. So that's it for Mag 7. Yeah, clearly demand for equities. There's nothing else to really say about that. I think, last week or a couple weeks ago or whenever the last video was, I said, things are going to start getting really easy, and things are getting really easy. It's just there's demand for equities, and demand for some of the best companies in the world. So what's there to say? Things are in an uptrend. So that's that. All right, now let's go over to the S&P 500, and it's totally fine. Again, I mean, all of the weakness was completely bought today. And certainly adding to positions on this weakness today, which I'll go over later on. But yeah, again, same thing, right? We're seeing continued demand for equities, even with the longer end yields really blowing out. So again, these are things that you kind of look at and think, okay, that's bullish, right? A couple weeks back, whatever this day was, but this was a Monday, essentially on like World War III news, and I was saying that if this doesn't scream go long equities, then nothing will. And it's sort of similar position that we're in now. Just another little signal to go after something. So that's all that is. Let's look at Russell. I haven't really looked at Russell that much, and yeah, see, same thing. I mean, yeah, right here off the 200-day moving average, 21-day EMA, some weakness, completely bought, just bing, no big deal. I'm sure if you're holding this the last couple days, yeah, see, yesterday, really, really tough day for the Russell, and today also just dumps, and then was all completely bought. So those are things that you add into the bullish hat, and good volume. So now let's go over to my favorite, Dow Jones, and I'll talk about in positions, but we're really close on loading up here on Dow Jones, and definitely have some stuff with exposure with Dow Jones. But anyways, same thing. I mean, right off the 21-day moving average, stochastic down here around 30. We're in a bull market, an uptrending market. What's there not to love? This pullback yesterday and today shouldn't have been of any concern, and as of now, it's still proven to be not of any concern. So now let's go over some sectors here, and while I'm thinking about it, XLF, bank stocks are performing earnings. Thanks for that earnings. They've all beat earnings thus far. Not that surprising. This weakness. So I'll talk about this more in positions, but Monday started position. Yesterday was adding to this. Today was adding to this on weakness. Certainly be adding XLF. This all looks great. Oh, I'll talk about this in positions as well, but yeah, caught all this. Now it's time to get back in again. This looks good. It all meets my criteria, so that's all I care about. So anyways, yeah, that looks good. Let's look at some banks here. Bank of America. Yeah, nice recovery off the 50-day moving average. JP Morgan. Doesn't look that good. Berkshire Hathaway, I think, looks pretty terrible as well. Yep, it does. Let's see how our old friend Goldman Sachs looks, and it looks fantastic, does Goldman Sachs. Wow, this looks really good. Let's look at MasterCard. Doesn't meet my criteria at all. Let's look at Visa, same thing, doesn't meet my criteria at all. However, it wouldn't surprise me to have some sort of balance here. Again, we are in a bull market. And sort of at, kind of extreme levels as to where the chance of this going down further from here is a little bit less in the short term. So that's it for that. Let's look at industrials here. Looks fantastic right off the 21-day moving average. Let's look at utilities here. And really not performing as I expected. Oh shoot, communications. This looks good. Let's go after XLC. Okay, let's look at biotech. And right here at the 200-day moving average. Doesn't meet my criteria. XLV. Doesn't meet my criteria. This thing's still sort of in a downtrend, right? The 200-day moving average is moving down. That is a definite no-go. And let's go over some real estate. How's real estate performing these days? It's good to see real estate holding up as bond yields have, as rates have been going higher. So that's good to see that one. Let's look at home builders ETF, and we've got some volume coming back in. This could be a bottoming pattern forming. And that's obviously good for the overall market. And so now let's go over some nuclear stocks, as the nuclear industry is in a massive uptrend. And, this is something I've been talking about for a while. We have CCJ just on an absolute tear, making, all-time highs. I mean, insane moves. SMR up 7.2% today after being up a couple percentage points yesterday, and Monday was like 10%. Right, so this has gone from 37 to 46 in 3 days. Insane. When I started this position, it was back here on this day, which was like a 12% day, maybe something like that. 12% day. And I'll go over. Actually, you know what? That's it for. Well, no, that's not it for the whole. Okay, so we'll go over the positions here in a little bit with this. So, I mean, SMR, unbelievable good chart pattern here. When I was saying back here, if it's not screaming, hello, follow us, we have lots of money. Institutions are pumping money into nuclear energy sector, and it still continues to prove that they still are. LO, same thing. This one, same thing. Wow. Yeah, I mean, massive gains to be had here, and there will continue to be moving forward. I mean, if you think this is like over, I mean, this whole thing is really just getting kicked off and is going to be nuts for the coming years here. Yeah, I mean, look at, so this nuclear energy ETF, look at this, beautiful looking, wow. Wow, wow, wow. Yeah, sweet. Yeah, it's cool to see. It's cool to see this sector. I love new themes to go after. The nuclear energy sector has been a theme that I've been going after and tracking and, you know, talking about or whatever for a little while now. So it's really nice to see this thing really working. With CCJ, we were really catching some moves through here, and then to see it all dump, I thought, man, my thesis is wrong on nuclear energy. But it has since turned around, and that has got me pumped up. So, okay, let's look at gold, silver. Yeah, I don't know. I don't have an opinion. I don't have an opinion. So there's nothing to, you know. I mean, it's in an uptrend. I don't know. Silver. Really surprised that this day was this Monday, did not continue higher. Really surprised. And I wonder if I wrote down my silver position. Yeah, I did. Cool. Okay. Yeah. So with that, that's market analysis. I don't know how to sum it up other than there's demand for equities. So until that changes, there's no reason to change the mindset that you're in. So yeah. All right. Now moving over to positions that I'm in / have closed out since the previous video. And yeah, so if you guys don't care about that, feel free to sign off here. So previous video, man, those TQQQ calls that I was in, I don't have the dates written down here, but since I made that last video, whatever it was, yeah, those average price of those calls were $6, so I'm at $9.40. That's a 57% gain. We have XLI in here. Yeah, wow, look at this. Jeez. Maybe I got out of these and haven't even been paying attention. But yeah, XLI 325 in these. Oh yeah, like right here, this day. Yeah, that was this day. That was Monday. 325 was average cost base, so 575. That's a 77% gain. I can't exactly recall where I got out of these. I mean, I could look it up, but whatever. XLF, yeah, same thing. Remember, the same day. Yeah, when I made that video, like, this should be all in. Yeah, so XLF, I had $53 strike price. I had $52 strike price. You know, remember when it was here and I was saying, you know, from here up to 53 seems like a really, you know, far way away, but it won't be that far. You know, I want a riskier play because I thought that, well, let me rephrase that. Because my strategy and my style was pointing to a high probability that equities were about to go on a tear, so I wanted something riskier. And we talked about how, you know, a $53 strike price and XLF is a little bit riskier for me. So anyways, $53 strike price, $52 strike price, a $53 strike price, 85 cents, sold those for $1.69, which is 98% gain. $52 strike price, $1.49, sold for $2.23, which is a whatever gain. I don't have it written down here, and sometimes math is hard. So I didn't catch all, on this day right here. like right around here is when I got out. I missed this whole day. That would have been nuts, but it's all good. Silver. I was in silver. I was in silver like here, and then adding throughout here. On this day, I thought about closing out this position 7-9, and boy was I glad that I did not. I looked at it and was like, this thing's not even below the 21-day moving average. It cannot get out of it here. It'd be terrible to do that. So I caught this whole move. Those were September 19 was the expiration, $35 strike price. Average cost basis 109, sold for 181, which is a 66% gain. Now moving on over to things of more recent memory. So Bitcoin, you guys remember I was in these Bitcoin calls and was adding to these big time. I had multiple different positions in IBIT, geez, I don't even know where to go with these. 420 was average cost basis, sold it for 930, which is 121% gain. I had some other ones that were average cost basis of 290, sold for $6 that I was adding to as this thing was breaking out, which is 100% gain. If you guys recall, my short term Bitcoin price target was $120,000. This on Monday exceeded that price, and so this is basically how everything was looking. So this was all after hours, right? This is the middle of the night. This is what, like 6:30, 6:50, and I sold like exactly right here. And then as you could see, things really started to sell off. So why did I sell right there? So a lot of this was luck, but however, of selling, right here. So my price target, my short-term price target was 120,000. It had hit 120,000. And then actually it was above that. And then so my next thought process is, am I happy with 100% return? Am I happy with 120, percent return? And the answer is yes. And then the second thing is, am I willing to give back any of these gains to ride it a little bit higher? And the answer is no. I do not like to get greedy with my positions. I like to hit the target and get out. So that's what I did. Now, new positions here. So XLF, like I was saying earlier, XLF, I started another position brand new position in this on Monday. Nice bounce off the 21-day moving average. Strong close, strong day. I wanted some exposure for bank earnings. And the subsequent sell-off yesterday was of no concern. And today was also of no concern, to which I was adding to these. So anyways, those are September 19 is the expiration. That's $54 strike price. 81 cents, and those are currently 71 cents. Oh shoot, I didn't go over SMR. Okay, so this one, SMR. Remember I said I started a position here, and then this thing was just getting booted. But again, it was of no concern. I mean, it sort of sucked on the portfolio. It was really quite the drag, because this certainly went down, 40 to 35. That's quite the move, and especially in options market. I was down big on this position, but was of no concern to me. This still, what an amazing looking chart pattern, even in here, right? This is this was no concern. We're in an uptrending market, in a smoking hot industry that, in my opinion, is really just getting started. So I was not concerned in this. I didn't think for a second I was going to lose on this one, so I was adding to this position. And then was this Monday? This was like 10% or something. I mean, just unbelievably strong day. And I thought, this is such an obvious place to get out. I have a good gain on these now. But with such a strong day, I figured I can't get out of these, which is funny because that's the same mentality I had on this day where I started this position. And then it came back to bite me. And I'm like, you know what? We're not doing it. So then yesterday, pretty weak. And, was down at one point pretty big on those contracts. And it really sucked. And then today, let's go over what had happened today. So, but I still held that position. And then today, really strong, super strong. Then completely dumping. This was up probably 4% in the morning at 4%. Gave it all back in 5, 10, 15, 20 minutes. All of it back to then being down on the day. And I'm like, are you kidding me? What the heck is going on? Markets were dumping during this point. Then we come back up, only to then just completely start selling off again. And I'm like, oh no, I'm not taking these. I have a fantastic gain. If things are getting all weak, things are selling off, I'm not letting this gain go. And so I set it at $6.60 to get out. So got an average cost on these is $4.50, which is less than I started that position. So then I set it 660, which was like right here. And then look what happens. Just monstrous. I think these contracts might have ended the day at like 790, 780. All right, that's huge. So does that suck to leave that on the table? Yes. It certainly sucks. However, like I said, this is just getting ramped up, rocking and rolling. I do realize, what is this? May. It's gone from $20 to $46. And could that possibly be extended? No. Short term, I really don't know. But in the intermediate term, this industry is screaming, go after me, go after me, go after me. So I will continue to do that moving forward. And okay, so that was that. Now other positions, well, TQQ, I'm in these again. The leveraged NASDAQ 100, those September 19 is expiration, $86 strike price. It paid $8. It's currently $7.20. As we were going through, when did I start this position? I started this position Tuesday. Because, today's Wednesday. Tuesday. So as this opened to all-time highs, gapped up, opened to all-time highs, I started the position. Now, in my head, I told myself, this is dumb. This is probably, just from experience, this is probably dumb. This is probably going to give it back. I don't trust this open. But just because of my opinion, saying, hey, this is a dumb place to start this position, I overruled myself with thinking it would be even dumber to not go after NASDAQ 100 ETF opening at all-time highs. You know, that's an even dumber thing to do. So I overrode myself and said, screw it. We'll do a starter position and we can work around this position. So, yeah, $8 was the average cost of this position. Is currently $7.20, and you know, today at one point I'm sure this was down pretty big. But like I said, this is of no concern. We can work in and out of this position. This is in an uptrend. I don't, you know. Okay, Shake Shack. Shake Shack, I'm still in these. $132. This equity position, $132-ish is the average cost basis. Got in on this day right here. When is that? June 20th. Currently 136. And no opinion. This is fine. This doesn't meet any of my sell rules. So I'm not gonna sell these. All right, that's that. Let's look at this on a weekly chart. I don't know. I really don't have an opinion. Other than this is in an uptrend, so cool. And burgers and fries. All right, now going back over to nuclear energy arena here. Again, CCJ hits all-time highs yesterday after what I would consider, this is pretty good, right? I mean, right off the 21-day moving average, which is what you would want to see, stochastic down here. You know, I'm sure it was down closer to 20, but regardless, 26, 30. Been a fantastic place, you know, to go after this. This meets my criteria. That's where I start positions. But I was already in SMR, you know, and had as much exposure to this industry as I wanted. So, you know, I wasn't adding to CCJ here. This just gives me more confidence that, you know, SMR is totally fine to continue to stay in. However, yesterday, I started a position in CCJ, but I have debit spreads in this position because, like I said, I had as much exposure as I wanted to, but CCJ's all-time highs, sectors, you know, firing is going nuclear, so I still at least, you know, want to capture some more things, and this also helped me out today, taking gains in SMR today. But anyways, debit spreads August 15, $75 strike price on the long call, $85 strike price on the short call. I paid $280 for those debit spreads. Those are currently $350, so this is definitely working out good. I don't know on this. I don't have an opinion other than this is an uptrend. Like I said, I like this industry. I don't know what else opinion you need to have. This is an uptrend. It's consolidating. It's bounced off of everything you would want to see it sort of bounce off of. And so, yeah, and again, $2.80 for a $10 debit spread means that the maximum gain on this could be well over 100%, and all of that meets my criteria for debit spreads. So yeah, there's nothing else to say about it. Now let's see if there's anything else that we could discuss or talk about. Microsoft, TLT, Train. There's nothing else to talk about. That was it. Shake Shack, Oh shoot, Unity and Roblox. I mean, look at this. Unity, just killer, right? I mean, this is really good to see. You want to see all sorts of sectors working out, right? And that's the stage that we're in right now. Multiple sectors are working. So now here, like, okay, cool. We've got a video game sector to start going after again. I mean, Roblox, I don't know what to say about this, other than how dare I miss this? I mean, yikes! I love Roblox. Well, I've never used it, but trading options in Roblox is great. This whole setup, everything meets my criteria, meets my eye. Massive uptrend. I've been saying for like what feels like an eternity that I've been trying to wait for a pullback, and one has never come. But again, it's just another thing to add into sector starting is working out. Take two, EA, sports. Wow, this is like a pretty good spot to sort of try and go after this one. But anyways, that's it. Nothing else to talk about. Let's see, how's Coinbase doing? Something I never really look at. Cool. Yeah, Coinbase really good. Uptrend is finally above its IPO, sort of. Yeah, that was quite the IPO. I mean, a range of $150-ish. That's pretty crazy. Look at this. Yeah, MicroStrategy 455, like we've been saying. This is so heavily shorted. Look out. MicroStrategy is going to go to $10,000. And that is the official price target. So there you go, $10,000. All right, that's it. I'm going to get out of here, and we'll catch you guys later.